What's up, everybody? Welcome back to Crypto For You. I got some exciting news for you guys today because some crazy things have just happened. Some crazy real life news have just happened that I want to talk with you guys about. And this news could propel Bitcoin to higher levels. So, without further ado, let's go straight into the charts. So, looking at Bitcoin, looking at the news, the first thing I want to talk about, this is a little bit bearish, but I want to talk about this because this will follow the whole video up by starting with this. So, Chase, they're changing their policy. Let me read you what their message was. So, Chase, our policy around crypto is changing. Hi. To keep you safe, to help keep your money safe from fraud and scams, we're changing the types of payments you can make from Chase. From October 16, 2023, if we think you're making a payment related to crypto, we'll decline it. That's it. Chase is just going to decline crypto. Why? Well, as you may not be able to get the money back if the payment ends up related to fraud or scams. So down over here, they explain why. We've made the decision because fraudsters are increasingly using crypto assets to steal large sums of money from people. Declining these payments is one of the ways we're helping to keep you and your money safe. So, what Chase is saying is that they will stop supporting crypto transactions because they are saying that people steal money off of crypto and a lot of fraudulent things are happening on crypto related to money being taken from and added to Chase accounts. And they do not want scams like this. So instead, they are now banning crypto. Not only that, but Binance, which is very interesting. Bybit is suspending its services in the UK entirely to comply with new regulations. So, Bybit, a very big exchange, is now suspending its services in the UK. And not only that, but in the last live stream, I was talking about how Binance is also being pressured in the UK because UK just came out with a ton of new data and a ton of new regulations. And instead of fighting back, Bybit just decides to let UK stay in peace and backs off. So now, Bybit, a seemingly amazing exchange, a seemingly huge exchange, one of the biggest exchanges on the market, is now backing away from UK and will not be supported in UK. Scrolling down, we can see that Bybit has made a choice to embrace the regulation proactively and pause the services in the market. There's going to be no trading in Bybit in the UK anymore. So Bybit explained that from October 1st, it will no longer accept account ongoing applications by UK residents. So on October 1st, there's going to be no more account openings in UK. And then on October 8th, existing users will not be able to make any new deposits, create new contacts, or increase any of their existing positions and products and services. So from October 8th, you're not going to be able to create new deposits, make new contracts, basically increase your position. You will only be able to withdraw. Like it says over here, they will be able to reduce, close their positions, and withdraw their funds from the platform. But Bybit is saying that UK should close and wind down their positions by 8 a.m. January 8th, 2024. And after this deadline, all UK positions will be liquidated and the liquidation funds will be available for withdrawal. So you have until January 8, 2024 to get your funds out in profit from the UK. This is interesting. Not just that, but Binance is also doing this. And US lawmakers, and Binance is also leaving Russia. What's interesting, cryptocurrency exchange Binance has claimed that it will fully quit Russia by selling its local business to a completely new exchange known as CommerX. Now, this is a new exchange. We don't know that much about this exchange, but Binance is basically selling its company, selling that part of its company in the Russian department of Bybit will now be part of CommerX. If we go down, basically they're saying, while proposing its smooth migration, Binance hasn't provided much information. They're not saying that much information, but what they're trying to do is what they're doing essentially is leaving Russia and leaving all of the accounts in Russia, trying as smoothly as possible to migrate them to a different exchange called CommerX. This seems very bearish in itself. And if you look at the Bybit exchange itself, you can see something very, very interesting. If you look at Bybit Exchange itself, you can see that Binance is at the brink of collapse. The exchange on Binance is actually very close to falling down much, much farther than it is right now. As you can see, Binance used to be at around $600, $700 at all-time highs. Now it's at 200. So you can see the decline in Binance. But what's more important is that after this level right over here, after falling below $212, there is no support at this level on the VPVR until $45. So Binance is stepping out back. Bybit is also stepping back from UK. Basically, exchanges are starting to move away from being in all aspects of the world. And I talked about this in the previous live stream. Binance was also being severely pressured and they were trying to fight back, and they're getting sued, and their companies getting sued, and their CEOs getting sued. And watch the previous live stream if you're interested. But that could be bearish news, not just for Binance, because if this news does become bearish and people react to it very negatively, we could break this support. Binance cannot afford to lose its previous lower low. If we break below this level, if we Binance breaks below 183 points, then the next level for it is actually at 43. That's it. Just 43 cents. That's when the VPVR huge support levels. That's when the VPVR comes back. And how big is that level? How big is that drop? Well, that drop is around 77%. So a fall down to this level will be catastrophic for Binance. So Binance and Bybit need to not cause this huge downfall. But some bullish news, this is what the bearish news was, but some bullish news that's been happening in the world is that the SEC postpones its verdict on the spot Bitcoin ETF. Okay, that doesn't seem bullish, but I want to tell you why this is bullish. That's because of this. After they released their postponed verdict, so what they're trying to do, the SEC once again delay their verdict on ETFs. They don't want to decide the ETFs. They delayed it to January 10, 2024. After they did this, not that long after, there was actually a whole entire court gathering, and after that, lawmakers urged SEC to immediately approve the spot Bitcoin ETF. That's crazy. So, if you go down over here, it says, 4 U.S. lawmakers have called the SEC to immediately approve spot Bitcoin ETFs. Following the Court of Appeals decision, there is no reason to continue to deny such applications under inconsistent and discriminatory standards. We urge you to approve the listing of spot Bitcoin ETPs immediately, the lawmaker told SEC Chair Gary Gensler. They are telling the SEC chairman of the board, Gary Gensler, to approve ETFs because there's no reason to deny it after this whole entire court decision. There was a whole entire court gathering with the SEC, with everybody else, and now the SEC is being pressured to approve ETFs, and I've been talking about how bullish ETFs are. If Bitcoin ETFs get accepted into the markets, this could be very, very bullish for Bitcoin because ETFs will be able to take Bitcoin and place it onto the stock market. So essentially, there will be Bitcoin in more aspects of the world. There will be a greater demand. Not just that, but it will be more widely known. And Bitcoin, of course, will be bought out by those companies, which will cause Bitcoin supply to decrease, which will once again cause Bitcoin's price to start rising up. Give me 1 second. And so, SEC does not want this. They once again have been basically saying different excuses on why the SEC the ETFs should not be approved. It's not secure. They rejected all these different exchanges. I believe there are a ton of exchanges listed over here. It's fine. There's a ton of exchanges trying to basically get the Bitcoin ETF approved, and the SEC just stops wanting to accept it, saying, for example, it's not safe enough. We need more time to decide. They might change something. They're basically giving a ton of excuses, like they said over here. So they at first, right over here, the right over here. This ETF joined the ranks of several spot ETFs like industry giants like Investico, BlackRock, Fidelity, VanEck, Valkyne, Wisdom Tree, and Franklin Templeton, who all want to make a spot Bitcoin ETF. And this ETF that they just pushed the deadline back, they are joining all of these ETFs in waiting for approval. So what the SEC is doing is basically delaying all these ETFs from being approved. And imagine 1, 2, 3, 4, 5, 6, 7, 8, at least 8 ETFs, if it gets approved, will enter the market. Imagine how crazy bullishness that will be, because there will be so much demand that it will be insane. BlackRock, Fidelity, one of the biggest markets, one of the biggest investment firms, are going to be making an exchange. And at first, the SEC postponed its decision. This was back all the way in April, May. They just postponed their decision on 7 of these filings of 7 of the ETFs, including ARK21 shares, Bitcoin ETF, another big investment firm, to August 31st. And after August 31st, guess what? They postponed it again to January 10th, 2024. So is this when Bitcoin is going to be accepted, January 10th? Well, because lawmakers are actually squeezing the SEC to actually make a decision and to approve the Bitcoin ETF, this could happen much sooner, and this could be something very, very bullish. But what I'm trying to lead all these bearish and bullish news is to, even though we had all of these bearish news, what's interesting is that the crypto fear and greed is not reacting at all. Yesterday, the fear and greed was at 44. Today, the fear and greed is at 46. So even though we had all this bearish news of exchanges leaving the markets and leaving the areas like UK and Russia, we have this bullish news that ETFs could have a chance of getting approved, and that is stirring up Bitcoin. Let's look at the Bitcoin chart itself. Going at the 1 hourly time frame, you can see what Bitcoin has done in the last day. You can see the reaction to Bitcoin's news, to this ETF news. Bitcoin rose all the way to 26,500 after confirming support right over here. I was talking about how we needed to confirm right over here at 26,200 at this level, or the lowest we could confirm is at 29,500. If we broke below 25,500, I was talking about the possibility of us falling all the way to around 20,000. That was because of all the bearish news that was happening. But I did mention the fact that even though we had all that news, we only fell this much. We almost had no volume, no momentum. This was the only crash that happened. And after that, you can see that we started rising up. This can show strong bullish momentum, which means that this right here could be the bottom for Bitcoin. We could be potentially starting to rise. Looking at technical analysis, what are we doing? Well, we might be inside of this rising channel. Of course, on the short term, that is very, very bearish. This could be just a short-term channel, but there are a ton of bullish technical analysis indicators. Like, for example, there's a daily bullish divergence. Looking at the daily time frame, we have a daily bullish divergence when the price is going down and the RSI is starting to go up. And you guys can see we had this support, price is going down, and the RSI is starting to rise up. Now you might be wondering, why is this still a divergence? Well, that's because even though the price didn't reach this level, the RSI is still at its previous level, tapping the support. This could mean that we could have another pump up. What backs this up? Well, what backs this up is an on-chain pattern, an on-the-chart pattern called a bull flag that we might be making. Let me go on the smaller time frame to show you guys this in more detail. As you guys can see, we went from 24,900 to 27,500 in not that long, and after that we have fallen down to where we are right now at $26,000. And this could be a regular Elliott wave. This could be just a 5-wave pattern, and what we did right over here could be wave 2. This could be an ABC correction wave. Now, where do ABC correction waves fall down to usually? The golden pocket, and we can measure that using the Fibonacci retracement, and dragging the Fibonacci retracement shows that we have entered the golden pocket a while back and already started rising up. But the reason we did not start rising up in this level right over here is because we had no bullish momentum. We need bullish momentum. So even though we see all this bullish news in Bitcoin, what we need is bullish momentum. Sure, the bears are not that strong. We did not let us react bearishly to all this Bitcoin news, but bulls are not that strong either, which is why we are staying in this level and why we have been staying, if we go on the daily time frame, at this $15,000 to $35,000 since all the way from, when was this? March. We've been saying inside of this level on the long term, but in the short term, you guys can see that we could be creating a sort of bull flag. If we drag these lines right over here, we have been bouncing to lower levels in Bitcoin for a while, and if we manage to confirm support right over here on the ultra short term, on like the 15-minute time frame, and we get enough bullish support at this level, well then we could see a pump all the way up. Let me quickly draw you guys a huge indicator. Let me give you guys this target. We could see a rise all the way up to around 28,500, which would be a pump of 8% if we manage to confirm support at this level. And that's not all. Where we are right now is very critical for Bitcoin. This level where we are right now is very critical because this is the level of the 20-day moving average. This is a very big indicator that shows when we are in a bull market or a bear market, and what we need to do is confirm support. Even though we see this bullishness and this bearishness, the big key right now for Bitcoin is for us to confirm support at this level, and what we need is 20 hours. This daily candle closes in 20 hours. Not that long ago, as you guys can see by the wick, we were above this 20-day moving average, and now we are below. And whatever happens in the next 24 hours could cause Bitcoin to either have a massive gain or a massive crash, when we will react to not just the real life news, but to these on chart indicators, on chart patterns like this moving average. What am I trying to say? Well, the moving average, the 20-day moving average, shows when we are in a bullish pattern, a bullish trend, or when we are in a bearish trend. And right now, as you guys can see, we fell down right below this 20-day moving average and went right up and are testing it right now. And right now, we will see if this was a fake out or was this a confirmation of resistance. If this is a confirmation of resistance, then once we close this candle, we should be followed by another red candle going straight down. So once this 20 hours end, make sure you watch, because if we go back in time, we had many candles like this. For example, back over here, we were rising up. We had this red candle seemingly getting rejected, and after that we had one huge candle. If you see this huge green candle after this, well then that could be a sign, a big sign of bullishness. And I think it basically matters not just on if we confirm support, but on real life indicators. For example, if the Bitcoin ETF gets approved, because SEC is getting crushed by all these lawmakers who are basically trying to get the ETFs to work. And if that happens, then Bitcoin could start rising up. So in my previous live stream, heavily talked about bearish things. So go back into that live stream and watch that, because that was a good live stream. But today I talked about bullish things, and what it all hinges on is this level right over here, the 20-day moving average. Now, what I want to talk about is that some other indicators that we can see is, for example, the Gaussian channel. Now, I haven't talked about this indicator for a while, and this is a very big indicator for Bitcoin. What I was talking about, this huge hinging moment, this moving average, what I was talking about is the fact that if we confirm support at this level, we could see a pump all the way to $30,000. But if we get rejected, we could see a crash down to $20,000. That's how bad this could get. This is why this moment is super big for Bitcoin. The next couple of days is crazy. And this Gaussian channel could help us tremendously. If we are able to show that we confirm support at this level and break out of this Gaussian channel, well then, this could be a sign of a very bullish trend. This Gaussian channel on the weekly time frame is relatively this Gaussian channel, sorry, is usually used to show when we are in a bull market or a bear market in the ultra long term. And you can see that by the red bands and the green bands, but it's a very, very lagging indicator, which means that by the time this Gaussian channel flips, Bitcoin's already at around the halfway point when it's falling. But in the long term, we can use this as a huge level of support because seeing this Gaussian channel, you can see that, for example, if we confirm resistance on that 20-day moving average, then a fall down to $20,000 could be what could happen. This would be the target. That could be another big bearish sign if we could fall down to $20,000. But if we confirm support on that 20-day moving average, then what we could do is have another leg up like we did right over here. And what that could mean is that this bullish signal, this long-term bullish signal that we're back in a bull market, could be true. And we could be seeing a start to rise up. But the biggest long-term indicator that I want to talk with you guys that I've been talking about almost every single live stream is the halving. This is a very big indicator. I got to pull it up real quick. The Bitcoin halving. And it's so amazing that if you are a long-term investor, all you got to do is hold, and I will tell you guys why once again. Let me quickly delete a couple of things. But you guys can see that every 4 years we have been doing the same exact pattern. We have been rising up at the first year and through the second half of the year, and in the middle of the second year we would start falling down. And most people would survive through the bear market, and in the third year they would think that the bull market's about to start, but we reach about halfway to the previous all-time high, and then we see a ton of turbulence. And this is the part when Bitcoin has a ton of people get liquidated. This is the time when a ton of short-term investors get thrown out, thinking that they are about to make some quick bucks, just like they did back over here. But because of this 4-year cycle, you can see that what we do is have a ton of rises and falls. Yes, maybe we rose halfway to the previous all-time high. People could make money off of this pump easily. But back in 2019, they thought this was going to be the beginning of the all-time high, and instead of us going to all-time highs, we had major crashes. Now, we are actually basically copying what we did last cycle. You guys can see that a couple months after the halving, first pump started to happen. We saw the top happen at about the middle of the second year. And after that, we saw a huge bear market. Now we're in the end of the third year. We're basically in the bottom of this bear market at this bottom level. This was the end of the third year. And people thought this was the beginning of the bull market. But what I'm saying is, if we get rejected below this 20-day moving average, we could fall down to $20,000, and it will not affect this cycle at all because we are almost perfectly following what we have done the previous cycle in the third year. If you grab a line from the bottom and you put a resistance line at the top, this kind of looks like what we did. We rose up from the bottom point, and we rose all the way up to the top at the around halfway point, made a double top and started falling down. And if you guys look at where we fell down to, if I grab the Fibonacci retracement, we fell down to around 0.786 for the bodies and a little bit lower than that for the wicks, about halfway. If this is true and we do see a resistance level, below this 20-week moving average, then the next resistance line for us to break is this 0.382 level. Just like when we broke this 0.236 level, that's when it signaled this crash down. And looking at this level right over here, what is this level? This level is $24,800. Let me move this a little bit up. 25,600. That's the number that I was talking about. 25,600 is where we need to confirm support at. Maybe a little bit lower at like $25,000 straight. That's a very big level. So if we confirm support at this level, at the 20-week moving average in the next 2-3 days, then we could not see this dump at all. But if we get rejected and we break below 25,600, this bearish news that I was talking about this whole live stream, the previous live stream, and a little bit today, could cause us to fall down to 0.68 level, 2, maybe a little bit lower for the wicks, like 0.786, which would be around $19,000. And I was talking about this for a while. I was talking about the fact that we were in a Elliott wave. What is an Elliott wave? Well, it's just a wave of moves that happens naturally because of psychology. One, we rise up, and then we can't rise up anymore, so we have a crash down. But this is not a bear market, it's just a small recession to gain momentum once again, and we usually fall down to the golden pocket. After we reach the golden pocket, we start having our third wave, and it continues like this till we reach our 5 waves. That's how a bull market usually look like. And so, using that indicator, using this Fibonacci retracement, a dump down to the 0.61 level, a dump down to this golden pocket technically would be accepted as just a regular cycle. It's just cycles. We need a small crash just to get Bitcoin back to speed, back to its regular momentum. We need to see this correction if we want to continue to have a healthy rise up. Of course, it's not mandatory. What we could see right now is technically some people are talking about this right over here being a bull flag that could cause Bitcoin to rise up to $42,000. That could happen. That could happen very easily. Some other people are saying that we could rise up to $35,000. And of course, once again, I'm saying that could happen very, very easily. But cycles show that we could have a fall down to around $21,000 in the longer time frame. So even though we see this short-term bullish news, with this bull flag, with this real life news of bullishness, we see the target of us rising up to $28,000. Do not count that as a long-term bullishness, as a mid-term bullishness. That could be just short-term bullishness, because when we fall down in 3 steps. It's called an ABC correction wave. We have an A wave which falls down to a certain level, and the B wave. All the B wave is just a retracement that goes up to the golden pocket for the Fibonacci retracement, and after that we have our third wave, which goes down to the golden pocket of the bigger retracement, where I was talking about $19,000. What I'm saying is that we fell, and now we are now starting to rise up, and people believe that this is the end of this dump and we could start to rise up even farther and create new all-time highs. What I'm saying is that this pump right now that will happen in the short term, if we confirm support on that weekly, on the daily 20-day moving average, if we manage to rise up to $30,000, what you need to watch out is for us to continue to rise, because this could just be an ABC correction wave, and once we reach 29,200, beware that this could be just the top of the little tiny B wave, and we could see a fall down to $20,000. But it all, once again, hinges upon one thing, and that is this 20-day moving average. We have both bullishness, we have both bearishness, and we need to watch this. But once again, it is all cycles. With that being said, that's about all I have for today, you guys. The time is ticking. This live stream is a bit long, and I have a couple more things I want to say, but I will keep that for the next live stream. I will see you guys in the next video. Leave a like down below. Subscribe if you haven't already, because that will really help boost this channel. Now, leave a comment down below if you want me to review or talk about other questions or other indicators or other charts. Talk to me, guys. Come on. This will help me boost the retention of my videos. Now, with that being said, I hope you guys enjoyed this video. If you did, come on, leave a like. I'll see you in the next live stream. Bye.